Imagine watching a market chart. Suddenly, a single bar dwarfs the others. Its close is near the high in an uptrend or near the low in a downtrend. That's a strong trend bar, a clear sign of strength. These bars tell us the bulls or bears are fully in control, paving the way for a continuation. On the flip side, weak trend bars have long wicks or a close far from the high or low, signaling indecision. But what happens when a trend forms not just with one bar, but with a series of small, powerful moves? Let's find out. Picture a tight, persistent upward or downward movement where each bar leaves a slight gap from the previous one. This is a micro-gap trend, an undeniable sign of strength. Micro-gaps suggest momentum so strong, the market barely ticks back. Weak trends, by contrast, overlap frequently, hinting at hesitation and quick profit-taking. But a trend isn't just about gaps. How about consistency? Let's talk about consecutive closes. Strong trends often have multiple bars closing higher or lower. Each consecutive close above a prior bar's close is a vote of confidence from bulls. A series of consecutive closes to the downside is a sign of strong bears. The bars don't have to be big. As long as a series of bars has consecutive closes trending in one direction, it's a sign of strength. Contrast this with choppy price action, where bars close alternately up and down. Now, what if the trend pauses? How can you tell it's not over? Let's move on. In a strong trend, pullbacks happen mostly due to profit taking. Weak counter-trend traders often jump into a pullback thinking it's a reversal attempt that will succeed. However, if a pullback retraces only a small portion of the previous move and consists of small, weak bars that stop at prior resistance or support, it's a sign that with trend traders may soon jump back in and the trend will resume. In contrast, deep pullbacks that retrace as far as 50% or greater against the prior leg are a sign of fading momentum. They are a sign that a trading range is likely to start developing soon. Next, breakouts with follow-through. A breakout is exciting, but the real test is follow-through. Look for bars after the breakout to keep pushing in the same direction, especially when the follow-through bars are strong and increasing in size. This indicates that traders are entering in the direction of the breakout, expecting it to succeed. Weak breakouts often stall or reverse quickly within a few bars, leaving traders trapped. Recognizing this can mean the difference between profit and panic. Here's the bonus I promised. Trend acceleration. When a trend goes from steady to explosive, it often signals the final push before exhaustion. These moves often happen after a trend has gone for a long time, sometimes 20 bars or more on a 5-minute chart. It's often signaled by a bar or a series of bars bigger than all the prior bars of the move. Recognizing this can help you exit near the top or bottom. If you're serious about mastering price action trading, the Brooks Trading Course offers unparalleled insights from Al Brooks, a seasoned professional trader with over 30 years of experience. This comprehensive course includes over 100 hours of video content, covering a wide range of markets and timeframes designed to equip you with the skills needed to trade consistently. With a 30-day money-back guarantee, you can explore the course risk-free. Join thousands of traders worldwide who have transformed their trading approach with Al Brooks' guidance. Don't miss this opportunity to elevate your trading skills.